The economist Isaah Mhlanga joins us now for more on that. Thank you so much, Isaah, for your time. Today, you agree with that expectation of a shrinking?
Of course, median expectations is minus 0.5% quarter-on-quarter annualized, comparing first quarter of this year relative to last quarter of 2017. But I think that's there are many reasons to explain that decline or contraction.
Okay.
If you look at manufacturing production, it contracted. If you look at mining production, also contracted. Retail sales contracted on a quarter-on-quarter basis. So we are not as pessimistic as the market consensus. We expect only as negative 0.1%. I think the big risk there is going to be agriculture, which is quite difficult to forecast. It is usually volatile. But I think if you look from 2014, you can see a pattern or a trend that emerges for first quarter numbers. They normally contract, except of course for 2015, 2014 first quarter, 2016, 2017 first quarter numbers has always been a contraction. So it says to us there's a clear pattern in the first quarter numbers, which could be explained by festive season buying. As people go into Christmas, they also buy for what they would need when schools open in the first quarter of the year.
Which then drives
the slowdown in first quarter. But also if you look from a global perspective, we had our major trading partners' economic growth slowing down. The US slowed down, the Eurozone slowed down, the UK also slowed down. Japan went into outright contraction, which is why we saw exports slow down to 0.3% growth in the first quarter, while imports, on the other hand, continue to grow quite robustly.
Okay. So just talking and accounting again specifically for what happens in the first quarter, I want to talk a bit about the third biggest contributor to GDP, which is retail trade sales. What are we expecting there then?
Look, I think it's also struggled to grow on a quarter-on-quarter basis. If we compare last year, fourth quarter relative to first quarter of this year, it contracted by about 5.2% on a quarter-on-quarter annualized. So that would also have implications for the wholesale, because if retailers are not able to sell as much, it implies they're not buying as much from wholesalers, which then aggravates the contraction that we are likely to see tomorrow.
Will this at all alter your forecast for this year's economic growth overall, the average?
It's unlikely to alter the overall year forecast. If you look on a year-on-year basis for first quarter numbers, the minus 0.5% contraction translates to a positive 2% growth on a year-on-year basis. So it's unlikely to alter the overall year forecast, but also the expectations of an improvement in growth in the quarters ahead. If you look at sentiment, has improved. Particularly if you look at consumer confidence, it shot up to the highest level ever. You look at business confidence, also improved quite significantly. Although if you look at the PMI numbers, which measures sentiment in the manufacturing sector, they remained quite depressed. We expect the improvement to come in the quarters ahead, such that overall economic growth for the year as a whole is going to hold relatively well around 1.7%.
And if you looked at the ABSA PMI last week that came out, even though it did go below the 50-point neutral mark, the expected business conditions over the next 6 months were positive. What's underlying that positive sentiment?
I think if you look at the general environment in the country since the change in political leadership has been quite positive. One, from a messaging point of view, in terms of policy, you have quite good messages from Gwedemandashe with regards to the mining charter, which is going to be finished by the end of this month. You also have President Cyril announcing his $100 billion investment drive, which, if it happens, is likely going to lead to quite a significant boost in economic growth. And also the way the issue of land expropriation is being dealt with, proper consultation, and also quite clear in terms of what they are targeting, which is not farming land, but land that is unproductive and not being used or held for speculative purposes. So that, in a way, is a resolution of the policy uncertainty that we have seen over the last 10 years or so, which to us says South Africa is likely to be able to attract investment, which is going to boost economic growth. So we shouldn't view this first quarter contraction in bad light. It's a seasonal factor, but also combined with the weak global external environment.
We'll leave it there. Thanks for your time. Today, RMB Economist, Isaah Mhlanga.